Now there is a question regarding taxation. Okay. So in the first question is they are asking for be very careful about such type of questions. They are asking for not correct statement. Okay, you have to find out not correct statement. Okay, with regarding taxation. Okay, tax system with no or fewer exemption is more efficient. Okay, so obviously we know that the central government, especially the central government, is having our income tax laws or many tax laws. Okay, we are or this corporate tax laws. Okay, all our direct tax laws are having many exemptions. So because of that, the corporates and individuals use these exemptions to reduce their tax impact. So basically, if there is less or fewer exemptions, tax system will be more efficient. So this statement is correct. Tax system with no or fewer exemptions is more efficient is a correct statement. We have to find out not correct statement. Income tax cut would provide more disposable income to taxpayers. Obviously, see, imagine if the income tax is cut by the central government, naturally you will be having more money at your hand. So and the definition of disposable personal income is related with income tax minus direct tax. Okay, so be very clear. If the central government cut income tax, if reduces the income tax, naturally there will be more disposable income in the hands of taxpayers. So second statement is also correct. Now third statement, okay, tax revenue is maximum at optimum level of taxation. Okay, so there is have an idea when tax rate is too low or when tax rate is too high, the tax collection will be very less. So if the government is imposing an optimum level of tax, if the government is a tax which can be paid by the taxpayer, that is optimal level of taxation. Okay, the tax revenue will be maximum. Okay, so normally tax revenue will be maximum at optimal level of taxation. So third statement is also correct. We know that A is correct, B is correct, C is correct. So naturally D have to be a not correct statement, but we have to confirm it. We have to read the statement and to confirm it. Okay, balanced budget helps in accelerating economic growth. You have to first understand what is a balanced budget. Okay, so normally country like India is having a deficit budget. In deficit budget, actually what happened is expenditure is more than revenue. So expenditure is more than revenue. So this difference, this deficit is managed by borrowing by the government. So this borrowing is used for extra. Why the government? Why the government is keeping higher expenditure compared to revenue receipts is that in order to increase the investment and thereby improving the or accelerating the economic growth. So deficit budget, by borrowing and investing in many assets or many governmental programs, it results in accelerated economic growth. So balanced budget is something which the government will reduce the expenditure and balance the receipts and expenditure. So in balanced budget, receipts and expenditure will be the same. So since receipts and expenditure will be same, how the government will do it? By reducing the expenditure. Reduction expenditure results in, by the government results in lowering the economic growth. So this statement, balanced budget helps in accelerating economic growth, is wrong. Balanced budget result in lowering economic growth. So D is the wrong statement and D will become your answer. Next question is a question regarding direct tax. So you need to have an idea what is a direct tax and indirect tax. Direct tax is a tax in which if the government is imposing a tax on an individual or a company, they themselves have to pay tax. That is what is called as direct tax. They cannot shift the tax burden to someone else. That is direct tax. Indirect tax is in the sense that you can shift the tax burden to someone else. Government will impose the tax on a company. The company will shift the tax burden to the final consumer. They are called as indirect tax. Okay. So here corporate tax. First one. Corporate tax is a direct tax because the government will impose tax on corporate and the corporate will have to pay the tax. So first statement is correct. So we can eliminate B and D. Okay. Now the second statement, if you know the second statement, things will become easy for us. Dividend distribution tax. Okay. So dividend distribution tax is a tax imposed on when a company provides dividend to its shareholder, so it is also dividend distribution tax is also a direct tax. So 2 is a direct tax. So by eliminating A, we got our answer C, 1, 2 and 4 only. Goods and service tax, it is a indirect tax because the companies will shift the burden to the final consumer. So GST is an indirect tax. Capital gains tax is a direct tax. So answer is 1, 2 and 4 only.